Hello, personal finance. Sorry, I'm getting this set up and running. Welcome back. This is Unit 1 still, and now we're on to Lesson 2, which is titled Today is Tomorrow's Foundation. And we're going to talk a lot about kind of managing money, looking more at what our paycheck looks like when we get paid at our job, taxes. So we're going to go over a few of those things. But first, I want to go over this section warm-up with you. Let's zoom in a little bit there. Okay, so this section warm-up says, fact or fiction, to be rich, you have to save some of what you earn. Do you have to save it in order to get rich? Yes. If you spend all of your money, you'll never be rich. So you have to make a plan and put aside or save some money every month. And we'll make a note of that in your budget, which we'll talk about here in a little bit. Okay, next one. If you pick the right job, you can make sure that you will never have to pay income tax. Fiction. You probably get away with it if you're babysitting or something, where you're kind of getting paid cash. But any other job that you get once you enter the career field, you're going to have to pay your taxes. When you create a budget, you must stick to it no matter what. What do you think? Fiction. Budgets can be flexible, so don't think that if you put a budget together, your hands are tied, okay? Budgets are flexible. You kind of learn as you go, and you make adjustments from month to month. Next one, creating a budget means that you won't ever have any extra money to hang out with your friends. That is also fiction. But what we're going to do is we're going to plan ahead and just assume that you're going to want to spend some money with your friends. So let's go ahead and just plan ahead and put some money aside for that. That is specifically for that purpose. Okay, last but not least, you should always file taxes no matter how little your income is. Fact. And we'll get more into filing taxes, tax rates, income tax, state income tax, federal income tax, FICA, all that fun stuff. So we're going to continue to take you through this lesson. We just did the section warm-up, fact or fiction, so some of that might have been new information to you guys. Some of that might have been just a review. Okay, so let's first talk about some money management skills. You may have heard the name Dave Ramsey or Susie Orman before. They are big financial gurus, if you will, and we will talk a lot about both of these individuals, a lot in our class connects. You'll hear me reference them a lot, especially Dave Ramsey, just because I have more experience because I took his specific class in college. So I'll be referring to these guys a lot. They're very, very wise and have lots of information to share. Some things that your text suggests that you always want to consider whenever you're making any monetary purchase. Make sure that you're thinking about these things. So if you're worried about paying for the item, don't buy it. If you're sitting there and you're stressed and you're like, oh, I don't know if I can afford this, chances are you probably can't. So it's best to save up for it and buy it when you can afford it. Buy items on sale. That's always a good strategy to live by. Don't compete with your friends. You've probably heard the slogan, keeping up with the Joneses. So, for instance, if your friend gets a big flat screen TV, you're like, oh my gosh, I need a big flat screen TV. You don't. So that's where a lot of people get into trouble, though. They try and keep up with the fashion. They try and keep up with all the fun gadgets that are out there and aren't thinking about all the money that they're spending that they don't usually have set aside for those things. It's never too early to start saving. One thing this class definitely suggests is that you start saving as soon as you start getting money. So you don't even need to have a job, but if you're getting like birthday card money or graduation money, you should always be putting aside. A lot of people do like a certain percentage. So no matter what amount of money they get, maybe they always put 10% aside or 20% aside into savings so that they don't spend it. Another tip is to create a budget. And a budget just helps you to anticipate any expenses that you're going to have and to plan for them so that you're not caught off guard when that monthly rent check is due and you're like, oh my gosh, where am I going to find $400 for this rent check. We're going to plan ahead and figure that stuff out ahead of time. Okay, let's talk about income. We mentioned this a little bit in lesson 1, but let's dive in a little more. Okay, last I heard the minimum wage was $7.25 an hour, and so that would be your hourly wage or your income. Say you worked 40 hours this week, what would your paycheck look like? Now, some of you that have jobs and have had paychecks before, you already understand that you might not get as much as you think you were going to get. So let's just take a look at this. Say you worked 40 hours that week times $7.25 an hour. You would think your take-home pay you're going to be taking home $290 for the week. But actually, that is just your gross income. So your gross income is the amount that you earn at your job before taxes are taken out. Okay? So let's look at that same scenario now and include some tax deductions here. So now we're looking at 40 hours a week. You got paid $7.25 an hour. That gives you $290 for the week. Say 20% is taken out to go towards taxes. So 20% of $290 is $58. So once you subtract that $58 from your gross income, your actual take-home pay, the money you get to physically take home, is only $232, which gives us our net income. So that is the big difference there. Gross income is the amount of income that you are given before taxes are deducted. Net income is your take-home pay. So once all the taxes, other withholdings are deducted from your paycheck, that is what you're left with is your net income or your take-home pay. So you'll hear me use that phrase a lot, take-home pay, net income. So just make sure you know that those are interchangeable. But gross income before taxes, net income after taxes. Okay, let's dissect that paycheck a little further. Again, like I said, when you received your first paycheck, were you surprised about how much was taken out for taxes? I know I was. I was kind of like, I was so excited to get it. I knew about how much it was supposed to be because of what I was making every hour. But I go to look at it, I'm like, where did all my money go? Well, let's take a look at this sample paycheck. Okay, here is a sample paycheck, and I actually got this from the link in your text on this page right here, page 7. I followed this link to get to this sample paycheck. Zoom in a little bit there. Okay, so if you've had a paycheck before, it might look similar to this. Usually your check's down at the bottom of the page, and then they list all of the taxes and other deductions and withholdings at the top of the page. So with this person, we're looking at Jane's paycheck, we see that her gross pay is $452. So her regular rate is $10 an hour. She worked for 32 hours. She got some overtime hours in, an hour of overtime, and she also worked a holiday, which is the same rate for 8 hours. So add all that up, and she earned $452.43 as gross pay. So now we look at all of the deductions for taxes and other things. So we have federal income tax, $45, Social Security tax, $29, Medicare tax, state income tax, New York City income tax. So there's a lot of taxes out there that you might not know about. And this individual also, and this is kind of cool because like if you mouse over, it explains what each of these taxes are. So I definitely suggest you go in and spend a little more time and check all of those out. And then she also has these other deductions here. So aside from taxes, she's paying union dues, which looks like $5 a pay period. She is contributing to her 401k plan, $28 a pay period. She has a stock plan, life insurance. So a lot of these things are optional, but taxes, not so optional. So you can bank on paying those taxes out. Okay, so we have our gross pay, we have all these deductions from taxes and other withholdings, and that gives us our net pay. So her paycheck that she's taken home is $273. Okay, Okay, we went over a lot of these. We looked at, she had some state income tax being taken out, federal income tax taken out. Let's talk about FICA. You might have heard that phrase before. FICA stands for Federal Insurance Contributions Act, and when someone's paying into FICA, that covers Social Security and Medicare. So on that, on this paycheck, they showed Medicare and Social Security as separate deductions. Some paycheck stubs will show you, it'll just say FICA, and it'll have those amounts added together and deducted from your paycheck. So, Social Security, usually it's 6.2%. These numbers are from 2008, so I'm sure they've changed since then. But Social Security is usually 6.2%, Medicare 1.45%, totaling 7.65% of your income going towards FICA. And then also with FICA, your employer is obligated to match that amount for each employee. So they're also contributing 7.65. So in total, FICA is getting 15.3% of each employee's gross income. So adds up quick, seems like a lot of money. Let me move this here. Okay, so what percentage of gross pay is this employee taking home? So we're talking about the employee with the paycheck that I just showed you. So her gross pay was $452. Her take-home pay or net pay was $273. So in total, $178 was withheld from her paycheck. Okay, we say that the term is withheld from her paycheck. So then in order to find out how much percentage, take that amount that was withheld, the 178.58, divided by our gross pay, and that tells us about 40% was withheld. So net income or her take-home pay is only 60% of her gross income. So that big original paycheck of $452, she only gets to take home 60% of that because of taxes and other deductions and withholdings. How does that make you feel? Again, going back to my first paycheck, I was just kind of like floored at the amount of money that I wasn't getting to take home because I felt like I earned it. But we're going to talk more later on about taxes and what that money actually goes towards. So there's some things that you might agree with and some that you might not, but that's why you should go vote when you're 18. Okay, so let's get into some taxes. I need to keep this video under 15 minutes, so I might breeze through this, or I might have to cut it off and pick it up again in the next video. So we'll see where we get to. Okay, taxes. A tax is a government fee on income, property, goods, or other activities. There is income tax, which we just mentioned and we saw in that paycheck, which is the amount of tax deducted based on your income. So depending on what your income level is, you could be taxed differently. You may have heard the term tax brackets before, and depending on how much you make depends on how much you pay in taxes. So there is federal income tax, state income tax. Not all states actually have income tax. And there's also other taxes that don't involve your paycheck, but you should be aware of. There are sales tax out there. You've probably noticed that before. Charged on certain goods and services. This could be a state or a local tax. There might be both charged on certain items. And then there's also property tax, which is tax on property that you own. If your parents own their house, they're probably paying property taxes, and that's usually a local tax. So that money goes towards maybe your local schools or your city roads, different things like that. So I'm going to actually wrap this video up here because we're hitting my 15-minute mark. I will pick this back up in the next video.